Hey everyone, it's Heavy here. The information in this video could save you lots of money, so it's important you listen closely. This last week has been the worst for Bitcoin in 11 months, and stocks are not doing much better. If you are a long investor, it is important not to sell in times like these. Today, I want to go over 3 things that will help you get through painful periods like this and avoid unnecessary losses. 3 things you can do today are developing the right mindset, using mental strategies to cope with losses, and using trading strategies to capitalize on the moment and reduce risk. So let's get right into it. To successfully trade stocks, you must have the proper mindset. Having control over your emotions is the key to making money because you must have the ability to make objective decisions. On days when the market is a sea of red, poor decision making can exacerbate losses. Many people do not want to lose more money, so they sell, and some even have the idea that they will buy again when things stabilize. These people are trying to time the market, which is notoriously difficult. In this situation, timing the market would require that you're right twice. You have to be right about selling before it goes lower, and buy before it goes back above your sell price. Otherwise, you just lost money. If you have a long time horizon, the best thing you can do is to sit tight. After all, it's not a loss until you sell. Also, trying to do this alone is very difficult. So finding a community of like-minded people will help you deal with emotions and keep things in perspective. Take Meet Kevin, for example. He has been running twice daily live streams throughout this turbulence and has reported that many people, including myself, have found this community to be very helpful in navigating these tough times. Usually there's anywhere from 6,000 to 30,000 people watching those streams, and you can see the comments flood in of a bunch of other people that are going through the same exact thing as you, and it really helps to bring some peace of mind. Having people you can relate to that are going through the same thing will definitely ease the burden. Remember, we have to avoid making bad decisions. These are stressful events, but they don't last forever, so staying calm through the turbulence is extremely important. Next, let's talk about mental strategies you can use to cope with the pain that comes with seeing your account drop. I know this last week my account dropped a lot, and I never like seeing that. So the first and most important thing you can do is to not look at your portfolio. If you know the market is down, you know your account is down too. Watching money leave your account is terrible for your psyche and adds no value to the situation. Loss porn is not cool. Watching gains evaporate is no fun, but locking in those losses by selling is even worse. Making impulsive decisions can be costly, especially in the long run when you factor in compounding. Additionally, staring at your account can lead to emotions taking control of your decisions. In an effort to reduce short-term pain and discomfort, people will sell to stop the bleeding. To combat the desire to sell, try making a few nibble buys in some of your favorite stocks. When you see they're on sale, go in and just buy a few shares. Maybe add 2-3% to your position. Buying on red days puts your mind at ease and brings back the excitement of buying a stock. I know whenever I buy anything, I get a little excited. It also gives you the sense that you're getting a good deal, which shoppers love. They say the stock market is the only place where people don't like seeing the price of things go down. So think of it like you're going to the mall on Black Friday, and you're getting a great deal on all the stuff that you want. So now that we have your head in the right place, let's talk about trading strategies that you can use to capitalize on this opportunity and use it to your advantage. As Meet Kevin says, don't squander a good red day. A good example of this was March 2020, when we had multiple huge sell-offs day after day, and there was tremendous fear going throughout the market. The people that bought during that period have now increased their wealth tremendously. So with little dips like this, it's a good time to buy things when they're on sale. So if the market experiences a prolonged correction, or there are signs of continued weakness, you might want to consider capital rotation. Generally, your confidence in tickers varies across the portfolio. This is known as conviction, or how confident you are that a certain stock has growth potential. Capital rotation involves reducing the size of lower conviction trades and rotating that money into higher conviction or safer trades. Basically, if you entered into a position because you thought that it had some potential and now things are going down and you're losing money all over the board, well, a good way to reduce risk and reallocate some of that money towards your best position is capital rotation. So for example, with me, over the past few days, I sold off a few of my speculative positions and plowed that money into Bitcoin, which I think is currently trading at a discount. You know, it's over 20% below its all-time high that it set a few days ago. So I thought it as a good time to spend some money on that. Proper capital rotation can put you in a prime position to capitalize on the rebound when it comes. Because we know it's probably going to rebound pretty soon here. So pushing your money into some of those better positions at a discount is the way to go. To recap, when markets are red, it is important to have the right mindset, use mental strategies to control the emotional response, and reallocate capital from riskier trades into safer, more confident positions. I hope you found this useful and didn't lose too much money this week. If you have any questions or want to share your experience from this past week, please leave a comment down below. Folks, this has been Heavy, and I will see you in the next one.